In this video, you will learn 1. How to grow a $50 account using Volatility 75 index, which is one of the most powerful trading indices on Deriv synthetic indices. And number 2, you'll be learning the best trading strategy that works with Volatility 75. This strategy is peculiar to Volatility 75. It works powerfully for Volatility 75. And thirdly, you'll be learning the risk amount per trade in order to raise your account effortlessly. I'll be telling you how much you're going to be risking on your $50 account so that you can be able to raise it progressively and consistently. You won't be trading with too much capital. You have to limit your capital to be able to trade this and make money from the market using your small account. Now, let's get to the video. Alright, so for those of you who have been trading Deriv for a very long time, you know that Volatility 75 is one of the oldest trading indices on Deriv. This is what a lot of traders have used to make money in the market a lot. Volatility 75 is like the gold of synthetic indices. We have Volatility 75 and Volatility 51 is one of the strongest synthetic indices that we have been trading for a very long time. And you know why? Because it is very, very simple. It helps a trading strategy to work effectively because it is very, very volatile among all these trading assets. And that's why we like to trade them. Now, I'm going to be teaching you guys a trading strategy that I know is going to help you to grow a $50 account on Volatility 75 alone. And the reason why I'm going to be teaching you this is because I have found a trading strategy that is working for Volatility 75, and I'm going to review that strategy to you guys in this video. But before we even go to that, I want to tell you guys about the lot size changes on Volatility 75. So before, you used to have like 0.01 on Volatility 75. This used to be our trading lot size for Volatility 75. And guys, for some of you who have not been trading for a very long time, I'm doing this to refresh your mindset and tell you what's really happening right now. So now you can no longer trade with 0.01, which we used to grow a lot of small account. Like when I say small account, I mean very, very small account. Even cents, we trade cents using this lot size. But right now you can no longer trade with this lot size on Volatility 75. So right now we starting with 0.01. This is the least lot size on Volatility 75. Let's just look at the power. Let's see where I place my buy limit at the top here. Let me try and place a take profit target, or let's say a stop loss. And remove this take profit. So right now you need to have like at least, let's say, $3 to $5 to take a trade. That is, if you want to take a proper trade that you know that it won't take you out easily, you need about $3 to $5 to be able to take a trade right now on Volatility 75. And that's why we are going to be trading with a $50 account, because if you bring something like a $10, $15 account here, you are going to blow it easily if you make a loss for the first two trades or the first, So we need an account size that we're able to carry the weight of our trades. Now I'm going to be teaching you guys a peculiar trading strategy to this, and this strategy is very, very powerful for Volatility 75, and it's a strategy that all of you guys know in the market, and this is called the supply and demand strategy. Now let me move to the first example so I can show you guys what I mean. So the supply and demand works like this. When you see the market moving in a certain trend, let's say for example here you see the market moving in an uptrend, then you see at this point here, this market was moving down here. At this point here, the market picked up, moved up, and then returned to that same particular zone where it picked up from. This is now a demand zone. A demand zone is an area where people buy from, where the buyers are at work. And when you say supply zone, that is for a downtrend where the sellers are at work. And if you want to succeed with supply and demand, the best thing to do is to buy at the uptrending market and only sell at the downtrending market. Because if you are looking for demand in an uptrending market, you are following the trend. And if you are looking for supply in an uptrend, you are literally going against the trend and it is not going to work out. So it is always best that you go for demand when you are going with the uptrend and you go for supply when you are trading the downtrend. Now, once you have drawn out your line here, just look at the crosshair, look at the four corners of the crosshair. That's my focus on this thing. Look at this area here. So this our demand zone is where the market is supposed to return to. And if the market does not return to us demand zone, there's no way we are going to trade it. You must have seen sometimes the market will come to this point here where it's from this demand zone, move up, and then return to close to that demand zone before it start moving up. We cannot trade that kind of strategy because it has not gotten to the main demand area, and that is this area here, this main zone. You need to break that zone and give us a signal to enter the market. So we need the market to break the demand zone to be able to move further in our trade. So for this example here, you can see that when the market came to this point here, it didn't touch the demand zone, so it moved up and then now came back down. Now, for example, if you see this, you don't trade it. And I tell you, sometimes the market will just do this and start moving to your target direction. But you see, when you are trading in the market, you're going to see the price conflicting against your strategy a lot of times. Like you see things that are not in your trading strategy and they'll be going fine. But the problem is that those type of things that go fine don't usually work all the time. So if you say because this one didn't touch the demand zone that you're going to be trading the market, then it now moved up a little bit and now broke that demand zone. At that point, your stop losses has been taken out before it start moving to the target direction. So you should not trade a movement in the market just because it happened once or just because it used to happen sometimes. We are not doing with sometimes in the market. We want to trade what works almost all the time, at least something that works like 80% of the time, so that we can now make profit with it. One of the best things I've seen on volatility 75 is that when the market get back to this demand zone here and we see a pin bar, be it a bullish pin bar or a bearish pin bar, no matter the color, as long as it is a pin bar, the market usually move from that place and go up. So right here we have a pin bar candle. Look at my line exactly on the pin bar candle. So here we have a pin bar candle. Let me draw a box on it. So you can clearly see that pin bar candle there. So this pin bar candle is what we are going to be using as our signal to enter the trade. So each time you see this pin bar on this demand zone, that is when you enter this trade and you start making your profit. Now you think that this is working just once, but let me show you another example of this miracle on volatility 75. All right, so here we have another example of this demand zone, and you can see that the market from the demand zone here and then moved up and even broke this last structure here. You understand? Now you are wondering, why didn't we take this first demand, this one here? You see this one at this point here is because this price movement here is just too choppy for our liking. It's too choppy. But look at this price movement here. This one is moving clean and it moves straight up. And to even tip everything, it broke the last structure, which makes it a very powerful demand zone here. So we can now draw this our line here, this line that we already drawn here. You can now draw your line when you see that. And remember, to draw your line, you just need two things to happen. First, you just need two things to happen. First, you allow the price market to move up like it did here. It moves up. And then you wait for the market to at least move like half of this price movement. Let it move like down to half before you start drawing your line. Because sometimes you can see that the market will just come to that point there and start going up, which is not good for our demand zone. So when you see the price move at least half of this price here, half of this first price of the demand, then you can now draw your line expecting the market to touch it. So now, when you have done that, it is time to wait for your signal. But currently, when you look at this point here, the market actually touched this demand zone here, but it did not move to the top. Like, it didn't work because this is not our entry. So it just moved up a bit and then it came back. Now, when it came back, we had this price, we had this momentum candle, we have a now momentum candle, and here we have a pin bar. This a bearish pin bar because it still have the bearish color. So we don't care about the color of the candle. We are not we are not racist. So we know the color does not matter for us. We accept all the pin bar in this strategy. So be it black, red, any color that it wants to be, we can trade it and use it to make money. So this candlestick, this pin bar here is accepted. All we have to do is now to trade it and make our money. Now, to be able to trade this stuff, let me show you a quick example. You can just place your let's say after this bearish pin bar here, place you enter the trade. Let's imagine you enter the trade and then you place your stop loss here. This 1.36, very very low risk, and then you place your take profit target at the top there. Look at the top there. Oh my god, that is if you raise $1.36, you're making 12.23. But let's make our risk $5 for this our account size. Our account size is $50. So let's imagine we are risking $5 per trade. Okay, this one is too much. So 0.35. All right, 0.36. That's 4.90. I should have stopped at that, but let's see what 0.37 can give us. 5.03. That is just a difference of 0.03, like 03 cents. So that's $5. So if we traded this setup with a $5 risk, we'll be making $45 in a single trade. That means we have gotten almost all our money in one single trade. And that is crazy. Let me show you another example of this strategy, this setup, because it appears a lot on Volatility 75. And if you take your time to learn this trading strategy, you're going to be making a lot of money with Volatility 75 trading these synthetic indices. If you're new to these synthetic indices, go to the description box below and get your account ready because you're about to make money from the market. Let me show you guys another example of this setup on the chart. So Right here we have the market literally moving in a downtrend. You can see that the movement of the market here was downtrend. Now we are here. This is a supply zone now. When the market got to this point, it now moved down here, giving us a supply zone there. So that supply zone, we can now draw our line, which is this line that we drew here. Now when you have that, that is like almost the everything that you need. But you now need to see the market moving down to this supply zone before you draw it. Because if it's not moving down and it's just going down like this, it is not even going to work out. So when you have that and you are drawing your line, the next thing you want to do is that you want to see the market returning into this supply zone here. And you can see that when the market got to this supply zone here, it didn't give us our entry signal, which is the pin bar. It just gave us another candlestick there and moved down. And you can see that when it moved down here, it couldn't go any further down because this is not the entry pin bar. Now it has moved up now, but we still don't see our entry signal. We can see our entry signal among these candlesticks here, and then it came down again and then moved this final movement here, and you can see here we have a pin bar. So when we have a pin bar, the next thing we do is to enter a trade. Like, you don't waste time, just enter a trade and you place your, let's say you enter the trade here, make sure you place your stop loss above the pin bar and your take profit target at the next low, at this low here. You can decide to make yours at this point or at this point. It is up to you. So when you have that, well, anyone you choose is really up to you. So you can make it here or you can do it here, any one of your choice. So when you are done with that, it depends on your risk capacity that you can trade and your experience with this setup. So you're not going to be trading this setup like right away on the chart. You should go to the chart, understand it, and try to master this setup before you start trading them and making money with it. Now, since we have that pin bar, let's try to understand how much you're going to be making on this trade if we use 4.31. Okay, 6. 4.88. Okay, let's make it 8. Right, that's too much. Let's bring it back to 7. So now we have the proper risk for this trade. That's almost $5 for the trade. And now our TP here will be $47. And if you placed your TP here to give you $21.99, but if you place it here it will give you 47. Like I said before, the take profit target depends on you and how long you have mastered the strategy. So if you're a beginner, you should just place it very close. So now I have this here, this $47 for my TP. And you know that when the market, oh my god, let me draw it back again. That's it. So when the market got to this point, it almost hit our stop loss, but it couldn't hit our stop loss here. You can see it here. This is the closest it got to the stop loss. And after that, there was no other price movement that got to the stop loss there. And it was going down from that point onwards. So this is the kind of trade that I want you guys to trade on Volatility 75. It is very easy. All you have to do is pay attention to the chart and understand what the market is doing. So if you are new to trading with Deriv synthetic indices, all you have to do is click on the link below to register your new account and deposit your money to start trading. And I also offer VIP trading signals in my VIP group, where we drop trading signals every single day for traders. If you want to make money with us, like we are doing a lot of numbers on this VIP signal group every day. If you want to join us to make money on our VIP signal group, all you have to do is click on the link below. You will see our VIP signal group link. There you will see everything that you need to join us, and you can join us and start making money with us. I will see you guys in the next video.